Hi everyone, how are you? I know the market is not doing well, but I hope you are doing well. So today, what we're going to do is a lot of people have been asking me in my communities, in my Telegram communities, that Shashank, what are some good opportunities we can look at right now in the large cap space, right? Because the market has fallen, you are seeing that it is going down. Many large cap companies that are amazing companies have actually fallen down, and their valuation also has gone down, and they're looking at very attractive rates. So today, without wasting any more time, we are quickly going to get into five large cap companies that I feel are quite good right now for a long term accumulation. Okay. Please note, this is not a buy or sell recommendation. This is just companies I believe are good fundamentally and can do a recovery over time. And we will understand why they fell, why they're good, everything we will understand today. And before we go there, I think all of you guys know a few months ago we launched our small cases. One was a Fluid Q small case, which is a momentum based small case, and the other one was a Fluid C small case, which is a compounding basket. Now, obviously, the market has been super volatile and it has not been great at all. But this is my journey as a fund manager, and one thing that I have ensured is that we don't lose money this time, right? In the past, I might have lost money in some of those companies, but now I have made sure I have learned from that, and the main goal is not to lose money. And if you see Fluid Q, it has been handling itself, touch wood, very well. Where the Nifty 500 is 0% since we launched, and we are up around 3%. So we have got a 3% alpha on this. And Fluid C, which is a fundamental long-term 3-year horizon basket, here also we have not lost money. It is at where it is right now. Whereas if you see this, most of it is in fact small cap companies and mid cap companies, and still we have ensured we don't lose money because we have taken a good position in gold, and this is something we're doing. So again, for all the people who are interested in this, you can go check it out whenever you want. Okay, awesome. Let's go to company number one. So the first company that looks very interesting right now, which many people don't like, and today I would say it is a contra play right now, is your TCS. Now, the whole IT industry, as you can see, fell down. 1 year ago, it fell 24% in the last 1 year, right? It is just falling down from the peak of 4,500. I remember they even did a buyback at the peak, and it has fallen down a lot, right? And if you look at this company, fundamentally, nothing is wrong. It has come to a P ratio of 23. Only problem is what is happening is look at the growth rate of this company, right? So obviously you're India's largest IT company and you're growing at 5%, 5%, 1%, 2%, 3% per quarter. People are not happy. Now with the labor code coming in, they had a one-time expense. But even if I remove that one-time expense, this 5% growth rate industry is not happy. And why they're not happy is also because this company has insane amount of cash on the balance sheet, which it is not using. They almost have $10 billion in the balance sheet, which they can easily go and do a massive acquisition, but they're not doing it, right? So this is something people are little not happy with. But why I'm saying this is an undervalued play today, because everyone was shouting at TCS saying that, boss, you have missed the bus and you did not adapt AI. And if AI comes in, your services business will go away. Because if AI comes, people will spend on AI, they will not spend on people, and people will reduce. Like Claude can do most of the coding, etc., is what the narrative was, right? While this narrative is fair for small companies, TCS deals with large companies. They deal with banks. Banks are not going to build their system on Claude Pro. Okay, please understand that. So TCS will always be there. Yes, will they not get new opportunities? Slowdown will happen. That is already happening right now. That absolutely correct, right? But their existing customers have not left them and they're still growing by 4-5%. But now what they are saying is that we are not going to get into this rat race of AI. In fact, we will jump that entire thing. We will not go build our own AI. We will take one step ahead and we will go into becoming the architectural choice for enterprises. So now they're saying we are going to be the intelligent choice architecture for enterprises. Very smart, because they already have all the enterprises. They are going to become the co-architect of AI. So they're going to tell the BFSI companies that, boss, you want something in AI, we will build it for you, right? We will collect people, we will make it, and we will build it for you. So basically they're still doing services, but with an AI angle. So now if you see their presentation, full AI, right? Till now there was no AI in their presentation. Now everything is AI. How we are helping businesses make this leap. 5,000 AI engagements across industry. So now suddenly everything is AI. And that is why I believe that, see, at least now one good thing is they're going down the right path. Till now they were not even going down the right path. Now they're saying, so everything's AI. Look at this. TCS AI, making AI for clients, AI ecosystem play. So at least we know that, okay, cool. They have understood that they did sleep behind the wheel because GBT came in 2020, 2021. and it's now 2026, and they did not do this till now. 4 years they were just chilling, right? But at least now they've realized that they should do this. So now they have started doing this. So that means the recovery will happen very soon, and they will start getting good enterprise AI customers. And as I said, most of it comes from their BFSI only, which is banking financial services. So AI services is now separate, as they call it. So technically, it is still services. It is not AI services. It is still services. They're just saying AI, and a guy only, some Ram Murthy guy only, is sitting and doing the AI for them, right? So, but they're calling it AI services. But theek hai, chalo, at least we're moving in the right direction, and we are not losing market share. So this is one company that I really like. So this, I feel, right now is at a very low point when it comes to its P ratio. Also, it is very, very, very in its undervalued zone. So if you look at the P ratio in the max, it is coming down because the EPS is going up, right? EPS has gone up, but the P ratio is coming down. So whenever this reaction happens, it creates a spring that your earnings per share is going up, but your P ratio is falling. And if this continues, the premium for intrinsic value will go up, and a spring reaction will happen, and it will expand eventually, right? So this is looking again very interesting. So this would be my first company that I believe is quite undervalued right now and is a good opportunity, but 5 year time frame. You cannot do anything right now. Okay. Chalo, next. Second company is event play, which I really enjoy, which is Interglobe Aviation, okay, which is your Indigo flights. Now, Indigo, you should understand, it is a market leader. Okay, it is by far the best airlines right now in India. They had a lot of problems in the middle, but that was that arm twisting, whatever it is. I don't care about it. You don't care about it. Leave that. Right? We are investors. Because of that, the stock price went from 5,900. It fell all the way to 17%, 18% drop. Now, fundamentally, nothing went wrong. Fundamentally, they're still doing flights now. Everything's back to where it was. They had to pay a fine. Fine. Now, DGCA said that, okay, you know what, we don't like this company having more than 50% market share. ठीक है, कम कर दो, 45 कर दो, 47 कर दो. If I look at it 5 years into the future, क्या फर्क पड़ता है? How does it matter? If I'm sitting and looking at 5 years in the future, does this blip does not matter today, right? Even if they lose 2-3% market share, nothing happens to this company. A lot of people get this stupid narrative in the market. Again, narrative drives prices, and that is what has happened. That market share will go and Air India will come up and all. Fine, no problem. It will come up. The market is also expanding now. Please understand that the aviation industry is expanding. If you look at the airport traffic today, it is going up like there is no tomorrow. If you want open Adani Enterprises chart, PPT, and you go look at the Adani airport wala part, you will see that the number of air passengers are only increasing in India because the tickets are so cheap. Nobody wants to go in trains, and Vande Bharat prices are off the roof right now. So again, this is a beautiful arbitrage play. 5 years down the line, obviously this will be a very good play to play in. Yes, they have problems today. They might get one or two more problems. But if you ask me 5 years in the future, Shashank, anything wrong with them fundamentally? The answer is no. I think they're absolutely fine. Okay. Third company, little healthcare-ish jata hai. Let's go to healthcare. The third company is Max Healthcare. Now, Max Healthcare has absolutely dominated the healthcare space. Please understand this, right? Till now, Apollo Hospital was the king. Now Max and Fortis and all have come into it. And Max, if you look at it from a 5 year perspective, has given 500% return in 5 years, which is insane. Now, obviously, past performance does not mean future performance is great. And if you see in the last 1 year, it has gone down 2%. But from July, it basically fell down by 23%. Now, why did it fall down 23%? It is basically because the valuation of this company became little unhealthy. Okay, it went up a bit too much because in this, people look at the EV EBITDA ratio, and from everything, whether it's P ratio, EV EBITDA ratio, everything, this kind of went up a bit too much, and a bit too much for comfort, as you can say, right? So even if you see right now, the EV EBITDA ratio is 44.2. Now you might say, Shashank, what is a good EV EBITDA ratio? It is around 32. So they are sitting at 44. And if you compare them with peers, if I go to check the peers here, right? So this is Apollo Hospital. If I check the peer of Apollo Hospital, which is the top hospital in India, 29 is the EV EBITDA. This is at 44. Fortis is at 34, 25, 27, 31, 33. So when the valuation is so high, and that means everything of the future is baked into this, if I want to invest today as a fresh, I would rotate my money from Max to maybe Apollo or Fortis, right? So as you can see, it was more than Apollo also, but now it is slowly coming down. But fundamentally, this is a great company. Fundamentally, their average revenue per occupied bed and the occupancy in the industry is higher. They are going to increase their entire bed capacity by 2 times in the next 4 years. So if you ask me 4 to 5 years in the future, Shashank, how would this look? This would look very attractive, right? Today, it is falling. Yes, because of the valuation is too high and people have baked in everything in the future. But if you ask me from 5 year perspective, it looks good, right? Would you enter today? No, the valuation is still high, but can you keep this in your watch list to look at it? Absolutely yes. Okay. Now, coming to another very interesting company, all of you guys heard about it, and it is something that even I liked in the past. Varun Beverages. Now, Varun Beverages, again, 5 years has given crazy returns. Again, past return does not mean future return. 1 year, it has actually fallen down 11%. Right. In fact, if I look at it more from the top, it has fallen more than 11%. It has fallen 26%. Now, why is this the case? Did something go wrong? No. So Campa Cola came into the picture. They played a pricing war. The competitive advantage of Pepsi and Coke got challenged, and Campa Cola took good amount of market share. But please understand, again, the same narrative theory works here. Market share is growing. So if somebody comes and takes your market share, even if they have 33% market share at the end, let's say three competition has 33, 33, 33. Think about it. The market cap itself is growing and you all have 33, 33, 30. You will still make money. Fundamentally, nothing's wrong, right? So if I go and check their fundamentals, right, look at the yearly revenue, it is growing. Look at the yearly profit, it is growing. Did the margins go down because of competition? Yes, margin definitely went down. But this company has now no problem with all of that. See, if you play a long term game, then nothing will happen to you. If you play a very short term game in your mind, then a lot of things will happen to you, right? So that is basically what happened with Varun Beverages. A lot of people listened to the narrative, heard the narrative, and sold it. Yes, the valuation of this company was very high for FMCG company. I would not deny that. But the company is now sitting at 17,000 crores of reserves, and it is doing acquisitions in Africa, left, right, center, right? Campa Cola fight is in India. They are buying companies in Africa and they're building their dominance in Africa. So if I look at it again in the 5 year futuristic time frame, I think that would be very interesting to again look at, right? Now, coming to the fifth company, I know you guys might be getting bored, but let's look at the fifth company that is looking very attractive right now because of its undervaluation is Bajaj Housing Finance. Now, look at this. Okay, Bajaj Housing Finance last 1 year minus 20, last 3 years 39% down. In fact, from when it came in the IPO, it is only going down. Now, please understand, Bajaj Housing Finance is right now the best housing finance company in India, fundamentally. Okay, they lend well, they get revenues, and they lend volume. Interest rate cycle has been reduced in India. That means they're pushing people to go buy more and more real estate. Whenever tax gets cut, whenever more money is printed, and whenever interest rates are low, Indians always go and buy assets, which is real estate, which is a good thing that India does. At least my millennial audience so does that. I don't know about Gen Z what they do when the interest rate goes down, maybe concerts or whatever, right? But if interest rate goes down and it's 7.15 or 7.2, I am to like jumping. I'm like, one more property, let's get another property, right? Because बहुत low hai abhi, you can pay less interest and clear more principal and get good arbitrage on that. And because of that, demand is high, so your appreciation goes high. It's a beautiful cycle. But this company has been falling constantly. Even though everything about this company is good, it launched at a very high market cap. It was supremely overvalued when it came out. Why was it supremely overvalued? If I show, basically these companies get valued on their price to book ratio. So this company's price to book ratio is 3.55. Now you might say, Shashank, what is a good price to book ratio? Let's look at that, right? So the other company that is dominating in this space was LIC Housing Finance. LIC Housing Finance is also very big, and LIC Housing Finance, from volume wise, it is very big. Not market cap wise, but LIC Housing Finance, if you look at their price to book ratio, they are sitting at 0.78. Now, a lot of people said LIC Housing Finance is 0.78. It is undervalued because they make, so much sales. Look at the sales this company makes, okay? This company is making 28,000 crores of disbursement, basically making 6,900 crores in financing profit. And if I look at that with Bajaj Housing, right? Bajaj Housing is making 3,000 crores in financing profit. So it is 2 times less than LIC Housing Finance. But LIC Housing Finance is at 25,000 crore market, 28,000 crore market cap, and Bajaj is at 76,000. Now, you might argue that, Shashank, what is correct? Is LIC undervalued or is Bajaj overvalued? So answer is both are correct. But why LIC is undervalued is because people don't trust LIC because it's not a private company and their NPAs are higher. They don't lend perfectly. They don't lend very well. Whereas Bajaj lends amazing. But the problem with Bajaj is the valuation was very high till now, and it has come to 3.59 price to book ratio. The minute it hits anywhere between 2, I don't think it will hit 2. I mean, if it hits 2, it's amazing. But see, this is a leader. So when you're looking at the fastest growing housing finance company, they always have some premium involved. Yes, the premium it was trading was around 4, 5, which is a bit too much. But anywhere around the 2 range, 2, 2.5, I would start accumulating this because it is a steal deal. Because if I look at it futuristically, long term, boss, housing finance in India will always do well. for, let's say, 20 years in the future, you cannot go wrong, right? I'm only looking at it from long term. And this company has fallen down so much right now. And it's one of the best companies. Management is awesome. Everything is awesome. But it has fallen down 39% from its IPO. I don't know when it will do a turnaround. I cannot say that now the turnaround is happening. Absolutely not. I don't know. But fundamentally, it is growing. Again, that squeeze is happening. What do I mean by that squeeze? If I show you here, if I go to price to book ratio and I do max, you're not able to see it clearly, but the price to book ratio was at 5. Now it has gone to 3.6. But the book value of this company will keep going up. Now it's 23, then it became 25, 22 it was. So the book value of this company is going up, but the price to book value is going down. That means a squeeze is getting created again. And if the squeeze gets created, again, the chances of it creating a spring reaction becomes extremely high. So as I said, I don't know when they will turn around. Absolutely have no idea. But these are very interesting companies that one must keep on their radar as well. Okay. So this is very important. And if you're very good at stocks, I think you would have understood this, that this is an arbitrage. But if you're not good in stocks, then you can just stick to mutual funds or some of the small cases that I have shown you. Okay. Awesome. This is me, Shashank Gadava, signing off. I hope this helped you. I hope you guys liked it. And if you did, please click on that like button and also click on that subscribe button. Okay. Thank you guys. Take care. See you. Bye bye.